Welcome back. You're tuned in to Bazaar Morning Call. As promised, we have Dharmesh Kant, Head of Research at Chola Securities, who joins us on the show. Hi, Dharmesh. Good morning. Wishing you the best in 2026 and a very happy New Year since this is the first time we're speaking. Well, Dharmesh, over the weekend, the big focus was with regard to U.S., going ahead and taking control of Venezuela. Now, we wanted to highlight a few stocks out here. And as my colleague Sonal told us, that ONGC could be one of those beneficiaries because there's an outstanding payment that could come in. While for Reliance, it gives them access to Venezuela crude, which in turn could support their GRMs. Your view on both these two stocks, ONGC as well as Reliance Industries?
Yeah, good morning, Nigel. Happy New Year to you and all at CNBC TV family. I hope this 2026 will be a much better and a steady year than the volatility which we saw in 2025. Having said that, I think, as far as the Venezuela crisis is concerned, what has transpired in Venezuela has to be seen over a period of time, because the business outlook, how it is going to unfold, and how Mr. Trump is going to negotiate all the past, contracts with the companies dealing with Venezuela, and India is in a corner as far as the Russian oil purchase is concerned. So maybe some negotiation out there can still be on the offing, and overall, I think it will be beneficiary and beneficial for the Indian companies. So ONGC, it's more of a one-off kind of event out there. Then it depends on their exploration and production going forward, and it's a long thing. It will take 1.5 years to play out. But Reliance can be the immediate beneficiary of it. Earlier, they used to draw quite a good quantity of oil from there, and various reports are suggesting, $5 to $8 per barrel kind of again. My own sense is it will be $3 to $4 per barrel, given the currency depreciation which we have seen recently. So overall, net constructive for Reliance Industries, and we have been bullish on this quarter for quite some time, given the sum of part valuation. So 2100 is the price target based on FY27 earnings estimates for Reliance Industries.
Dharmesh, hi, morning. Good to speak with you. Out of all the business updates, and there are, some 15, 20 business updates, pre-quarter updates, anything really stood out to you? Surprised?
Yeah, good morning, Prashant. Very happy New Year too. It was not a surprise, but again, confirmation of the fact which has been trending for last 4-5 quarters was the public sector banks when they came out with their updates. So for almost 3-4 quarters on a consistent basis, they have been delivering mid-teens kind of a growth numbers as far as their advances are concerned. As compared to the private sector players, SDFC came out with an update of 9% kind of advances growth. So clear advantage out there for them. The stock prices have rallied quite a bit, but I think more legroom is there for them to go ahead. We have been liking Bank of India from the space for quite some time, and we also have an IC on it at around 112, 115 kind of stock price level. The highlight was there that 13.6% was the overall gross advances growth, but domestic was 15% and retail was 17.7% with asset quality supposedly to be stable and good deposit growth. So I think going forward, as the steam is picking up, almost all the financial updates were great. But this is one which will again get a re-rating, and likely a move by the time budget is rolled out can be 10 to 15% in the near term.
All right. Dharmesh, I wanted your view on some of these metal names, because metals clearly had a very, very good 2025, particularly towards the end. And some of them actually have shown strength. If you look at the valuations, actually they're looking a little bit elevated as of now. But metals is with momentum. Anything you like in this space? Metals, ancillaries?
Yeah, I think even 2026 would be good for the entire metal space. Given the fact that dollar index is not appreciating, that is where it is. And there's very high chance that 50 to 75 basis point rate cut will come in US, given the government pressures which is there on the Fed. That is again a good beneficiary would be the entire metal space. And almost all the central bankers across the world has been accommodative monetary policy that also offers well. I think if you look at historical trend, then the valuations do look on extended or elevated levels. But the type of numbers which are expected from the metal companies, these valuations may be justifiable if you forget the historical trend and value them on their. If the company is giving 15 to 20% kind of a profitability growth, why can't they command a P multiple of 12 to 14? Earlier, they used to be 7, 8 kind of a P multiple. So that re-rating is likely on the cards. So that is the take of the metal space. The stocks which we like here is one is the Hindalco, despite all the problems which they had, the fire and the debt issue. But I think Hindalco will remain to be in a good phase going forward. And on the ferrous space, we like JSW Steel quite a lot.
Yeah. Metals, autos, and PSU banks, right, Dharmesh? These are the three areas which have done very, very well in 2025. And actually, they've had a fantastic start to 26 so far. I mean, the few trading sessions that we've had. We had the December auto sales numbers. We'll have the Bajaj management join us a little later. Anything you like in that space?
Yeah, Prashant, I mean, auto numbers were great. If you look at on year kind of a comparison, almost everybody came out with 70 to 20% kind of a growth numbers. But you have to split it between two-wheelers and the four-wheeler basket. As far as two-wheelers are concerned, the thing which I noticed was a declining trend in the month-on-month sales. September, October, November, and December, if you combine, I mean, be it Bajaj Auto or Hero MotoCorp or TVS Motor, they all have a slightly declining trend. I mean, that is a point to be, have in mind, having regard to the valuation multiples where they are trending out of now. But Maruti came out with a very strong set of numbers. I think going forward, there's a huge opportunity out there. Just to give you one macro number, I mean, there are 36 crores families in India, and last 20 years, the cars which have been sold is around 6 crores, around about. So, multiple headroom out there for the organic growth opportunity, almost 6x kind of a growth opportunity is there for the four-wheeler segment if you say one car per family. So I think Maruti has stabilized and consolidated its position quite well at the entry and mid-level segment. And that is one counter which I think will continue to do well. As far as two-wheelers are concerned, it will be more premium driven. I mean, almost 26 crore two-wheelers have been sold during the last 15 years. So that way, it's more of an upgrade and premiumization. And there, I think Eicher Motors stands a good chance going by the numbers as well. They have not shown a drift. So Eicher Motors from the two-wheeler pack and Maruti from the four-wheeler pack from the investment perspective remains the good buy. Others on decline, one can add.
To Dharmesh. Dharmesh, I wanted, I think you were in party mode as well for New Year's, but I wanted your take on some of these alcohol companies. In Friday's trading session, whether it was Allied Blenders or even Radico, both of them were down, I think, 3 to around 5%. The street is getting a little bit nervous because after what we saw with regard to, cigarettes, with that duty going up there, street is a little bit cautious with regard to alcohol companies. Could they be next? However, there are various clarifications that have come out from various sales side notes as well that state that, in fact, duties on alcohol are a state subject, while for cigarettes, it's a center subject. So that's why they believe that maybe, in fact, alcohol companies actually will not get hit. What is your take? Companies like Radico have gone up multiple times. Even Allied Blenders, from listing, I think it's close to have doubled, but they've come off considerably from the top. How do you approach them?
Yeah, I mean, there's always this overhanging sword on the alcohol companies. It's been a state subject, but in the past we've seen states have, reacted to them and they have acted against the alcohol companies, be it through duties or banning the entire, consumption of alcohol in the state. So there are multiple dry states in the country. So we don't know how this will play out. It's a very, sensitive and subject to politics kind of a thing. But in this environment, there has been pace. They have been doing well. Radico in particular has done pretty well. So what I have seen, the last few days I was out, what I saw was the Radico, brands were selling far higher than the other brands. So there has been clear shift in the consumer, preferences out there, and there are a couple of brands as doing particularly well. So I think this is an opportunity to buy into quality names. So I mean, United States and UL and all are, things of the past as of now, it looks like. And the new players like Radico, Tilak Nagar looks pretty interesting. So out of the two, I would prefer Radico for any, declines to get into. Valuations will remain a bit, higher side. That is how the case has been because of the fewer players out there. But yeah, Radico is the topic out there.